Welcome back to another episode in my open journal. Today, did the bulls find a bottom? Find out. Starting today's analysis on the 1 minute time frame, you're gonna see I have this gray line, and this was just a trend line, all right? The price opened and it was just falling, just and it kind of died right here. I saw little pops along the way, but nothing really too consequential. The big giveaway that the downtrend was pretty solid was the way the RSI rejected off of the 55 line like 5 times. Like, that's a lot. Each time the RSI would come up and then boom, 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 boom. And this is a very bearish oscillation to see this. And you do see the price just working its way down. This is a great example of the RSI and how to read it. 55 is not a level you're going to hear anyone else say to use. But when you're studying a stock and it behaves in a certain way, it makes sense to use the indicator uniquely, and Bulkowski supports that. After finding this bottom, I saw this reverse triangle. Maybe it's a megaphone, it doesn't really matter. The price did move up, reached the overbought condition, and fell, bouncing off of 45. And this was a good sign. This is what I call a bullish omen, right? We're rejecting the move to the lower end of the oscillator. And then we saw some flat movement up top while the RSI dropped, reaching down and out of the overbought region. This would be your classic bearish divergence. And earlier today I saw some divergence too. Here, this was bullish divergence, and the price did rise after that divergence and then fell. So here we have the opposite. Here we have bearish divergence and the price falling. It didn't really fall, did it? It kind of gradually laid down within the range of this weird backwards consolidation pattern, and this is a thing. I don't look at it very much because if it's backwards, it's going to be super hard to read. When the price did eventually get ready to make a move, it was around 11 o'clock, 5 minutes prior. What a time. Powell talking. And the price did rise, but right away, again, I saw this divergence. Because volume was so low prior to this move up, this move by the RSI just burned up the indicator, just burned it up. And these peaks were higher and higher, and the peaks in the RSI were lower and lower. That is bearish divergence. The pattern entered into a consolidation pattern thereafter. And right at the apex of that triangle, and as the day progressed, I did not draw this triangle very well, so this is with the benefit of retrospect I drew this, but at that apex, that's where the price did move back up, and we see the oscillator moving in a very bullish way, encountering the overbought condition and moving deep into it. However, this, again, we see it again, the bearish divergence. I mean, this had me scared, guys. To see this big candle here, this 393,000 candle standing out amongst its smaller fellows, like this was like a bullish thing. I was like, oh my goodness, my puts are gonna do so bad. Which is totally fine, and actually while we're talking about it, here are my open positions. And you're gonna see I am down on these, and this is perfectly okay. What I'm doing is turning over some profits I've made from the last big leg down, and I'm trying to leverage that into more profits. So all the money invested and shown here, and there is no money shown here, but all the money I use on these plays can be completely lost, and I still be within my acceptable profitable margin. So, you know, what's life without a little thrill? A December 17th $15 put that expires. I mean, this expires this Friday, and it's not even in the money, right? I bought it for $8 a contract. It's down to $1. This is a good time. This is what I call a good time, and I'm just excited to see whether or not that'll run to the money. Because if it does, that's gonna be a rush. So live a little, but trade responsibly. Not financial advice, obviously. This is just my journal, but this is what I like to do when I make a little money. I play a little bit. I like to play. A little play is healthy, right? I can only imagine what that's like for the financial industry to have a bunch of people like me playing around the markets, but here I am, so. Okay, let's have a look. This run did scare me, and of course my puts suffered a lot, but this is the great game. This is it, right? I saw this divergence, and I said, BS, that's not gonna keep going. That's a weak run. That's a weak run. If I was a bull and I was buying into this, I knew that I'd be so scared to be buying up here as a bull because the price dips. And this was actually a really consequential move. This single bearish divergence pattern today may have been the only important part of the price to watch, besides maybe the intraday low. Like this point here, finding a bottom here near that was it 2250 level, and then seeing the RSI burn out up here towards 25. Those are the 2 key points today. And I'm gonna back out. I'm gonna show you this big old bear flag. Okay, it's not a big old bear flag. It's actually a pennant, and it's just bearish. I am feeling quite energized today. I don't know what that's about. I guess I'm just excited. I'm just excited because I think I have a winning hand. That's why I'm excited. I believe that things are gonna go my way tomorrow, and I like that feeling. So let's start by looking at the RSI. The RSI reached an overbought condition the 8th of December and then fell. And we do see here that there was like this double bottom in the RSI, and this can be bullish because what it essentially does is it gives the price an opportunity for bullish divergence, all right, with higher lows in the RSI and lower highs in the price. So did that work? Was that true? I mean, no. Well, I guess technically it did fall, and then following that the RSI did climb and the price did with it. I mean, it's really weak. I don't know. I can't read that. I'm not doing it. But anyway, that's why a double bottom from the oversold region can be bullish, is because it gives the price an opportunity to move against that trend in the RSI and form that bullish divergence, which we didn't really see. And the price fell, of course. So in purple, this is the pennant I wanted to show. It starts way up here towards $34, and it comes down to that intraday low we saw yesterday. Wow, how low was that? Wow, that was so low. $20.80. That's right, it was within 50 cents of my broadening ascending formation target of $20.36, and this was a loose target, and still we saw that play a crucial part in today's formation, or at least in the last week. So this flagpole is 1, 2, 3, 4 days long. We'll call it 3 days long. So reasonably, we can expect any breakout from this move to occur over the same time period, which is about 1 to 2 or 2 to 3 days. Now, the price target for this pennant is around $18.81. And this is just the statistical likely price target. Volkowski does note on his webpage, which I have pulled up here on the right, that ideally, the price target for a pennant should be at a price level equal to the height of the first leg. That doesn't make sense. Let me show you. Here we go, scrolling. So here, this picture right here. The height of the flagpole, A, should equal the height of the breakout, shown in B. Ideally, but that's not what happens. And so Volkowski provides us with a percentage beating price target right here. 35% for upward breakouts and 32% for downward breakouts, which isn't, a whole lot. So basically what we did is just took the height of this flagpole and then multiplied it by 0.32, took that number and then subtracted from a breakdown price, which I used right here. I used $23. And the reason why I used $23 is because Volkowski provides some analysis as to when triangles break out. And right here, at this dashed yellow line, this is approximately where this would statistically, we would likely see a breakout. And I do have two lines here, and that's because there seems to be a heavy level of resistance around 24.50, but you can draw this pattern with the highs peaking at around $25. And both levels are very important, so I drew both of them. I just did. And you can see that there was a breakout of that lower trend line denied right here, and these two candles form pipes, and the price did reject here before breaking out, but also falling back down. So how do you want to view this pattern? Did this pattern break out or not? And it's a really good question, and I think the best way to look at this is to actually compare the bear thesis versus the bull thesis. Did the bulls find a bottom today? Because if they did find a bottom today, then I would say that the less favorable line for the bears should apply. That means this would be our level, and the breakout did occur. But if the bulls did not find a breakout, then I would be using this line. And this is just logic. I'm just using logic at this point. This isn't necessarily a Volkowski thing. I think Volkowski would say take the peaks of near the most significant level of resistance. That's probably what he would say. And 25 is pretty consequential in a lot of different ways when you think about it. Just psychologically, and also on the charts, and I'll show that too, of course. I'm sorry, this is gonna be a long one. So what were the bulls looking for today? They were looking for a bottoming pattern, and they didn't see it. They did not see it. I'm gonna pull up a blank chart here to tell you, to illustrate. All right, here we go. The double bottom, what would it look like? It would look like this. This is what that double bottom would look like, okay? And the way to calculate the price target for this double bottom would be to take the total height of the highest high to the lowest low, multiply it by, I think it's actually around 60%. It's quite generous. And then you add that to the confirmation level, which is the highest point in the middle of the pattern, this intermediate peak. So let's just guess. Let's just do a rough estimation here. Let's say $28 down to $21 is like $7, right? So let's just say you get $5 out of that for an upside target, which is generous. And that would be added to 25, which would put us back at 30. And 30 does look like it's a pretty important level. It's right about here. That is an important level. Isn't that interesting how you can just use a basic knowledge of Volkowski's chart patterns and find where these technical levels are? They're in the charts and you just have to be able to discover them, I find. So this was an important level. It really was. Look at that. Defines where the price would find its bottoms, where it would consolidate, resistance on the way back up. All right, the breakdown from the retracement of the larger measured move down. It all comes down to $30, and that would be the price target of this double bottom. But again, did the bulls find a bottom? And I don't think that they did, and that's because there's a confirmation level, as I was explaining just a minute ago. And today's close was below that level. Let me take a price level and just drag it across. There you go. That's it. You can see the price closed below this level. It flirted with going up and out. These two peaks on the 1 minute chart, this is where that bearish divergence in the RSI was. Of course, at this time scale, you don't see it in the RSI, but we saw it in the 1 minute. This is why it's important to look at a lot of different time frames. If you've been following my channel for a while, you know I use the 1 minute, the 15, the 4 hour, the daily, and the weekly. I kind of skip the hour. It just isn't that important to me. I find that I can get plenty of definition out of the 15-minute chart and just expanding the time frame to see what the hour might say, but I understand that it won't show me what the indicators are going to tell me on the 1 hour chart, but also the 4 hours can be more consequential than the 1 hour. So I would say that this double bottom did not pan out. And I've explained this before, I think in posts or comments, that every big move starts with a failed reversal. And this could have been the failed reversal, the failed double bottom, because now what I clearly see is this ascending triangle. And the ascending triangle is supposed to be bullish. It's supposed to be bullish. It's supposed to have a 60% chance of an upward breakout, and its price target's pretty generous. I mean, there's touch points all over the place. This is definitely where I want to draw the line, the very peaks, right? Wow. Okay. Well, you know, we recently saw a double bottom that broke down, and that was actually on the 4 hour charts, and I'm going to show that to you. Okay, let's zoom over, and I'm going to zoom in. Okay, and this was the double bottom that we saw last that broke, and it did occur at the top of this downtrend. Yeah, this downtrend started in September. It was like months ago. We've been in a downward pattern for a very long time. There it is. And this double bottom actually had a gap resistance to break through in order to confirm, which it did do, and it did close up here. However, it was a false breakout, and the price entered this consolidation, which is a triangle. And then it fell down back to the channel, and well, obviously we're flirting with that lower level now. And the pattern we have is giving us a target that is below that lower trend line. What that could mean is a breakout to the downside on a 4 hour chart pattern, which would be very consequential, a significant move down. And that's the way I'm set up currently. Now, most of my position is actually in cash. I have a lot of cash right now. And the reason I'm doing that is because I want to see the price go way up, and I want to just hop in on calls as soon as that happens. So I have all this cash just ready to go. But in the meantime, I'm increasing the size of that cash position with these puts. These puts are building the cash position that I will use to ride upward momentum. It's all about momentum play. That's what I do. I trade volatility. That's why I always have the implied volatility pulled up, except for right now, but I will load it. And while we're here on the 4 hour, let's talk about the implied volatility. There was a downtick today, and this is because the price simply is moving in a price range that it's already seen in the last recent history. And we won't see it increase again until we reach new lows or we break out of this area of congestion. But overall, it is clearly still in a significant uptrend. And in fact, I haven't looked at this yet in this light, but do you guys see what I see? Do you see what I see? If the implied volatility does tick up tomorrow, the implied volatility will be in an exponential rise. Nuts! That's nuts! That's so nuts. I mean, if you are waiting for MOAS, you're also watching implied volatility. That's why I watch implied volatility. I gotta tell you, the implied volatility won't stay flat during MOAS. But really, I watch implied volatility because that's where the money's made. Volatility in the ups and the downs. Why play half of a game? You're gonna lose a lot. Play both sides of the game and just make money on the movement of the price. That's where the money's being made. That's where the real money is. You can make infinite numbers of dollars in up and down moves through a limited price range. But if you only play one side, the up or the down side, while the price moves in that range, you're not gonna be able to make infinity money. You're limited to the height of that range. And I am not limited to the height of any range. I trade both sides and I make money on movement. So this was our failed double bottom that we last saw on the 4-hour chart. And let's talk about ascending triangles, because we have seen an ascending triangle in the past recently, and it actually proved to be bearish. And that was this guy right here in red. I put a lot of faith in this triangle. I YOLO'd back here. I actually YOLO'd back here. But, you know, there's actually a circle here. It's right there. I have it selected. Maybe you can see it. This was the approximate breakout timeline for the triangle, and it followed schedule. I thought it was going to be up here though. Like, if you go back to my old videos, you'll see this circle is actually up here because that was my bias. But as soon as this broke down, it was like, uh-oh, red alert, red alert, red alert. And that lower price target was at $35.64, and it did bounce there, but then continued to plunge. And this was the last ascending triangle we saw. This is supposed to be a bullish pattern, and it actually broke to the downside. And this is a great pattern. And the reason why I say that is because at the apex, where the two trend lines connect, at that point in time, there was also a trend reversal right here. This is something that Bulkowski also talks about on his website. This is really good information. This is really good charting, guys. This is really good charting. I'm just gonna go over my chart in general. I think I have enough new subscribers to kind of warrant this. So I saw the run in June and understood that this was a falling wedge, which is bullish. And that falling wedge price target, it's way up here. It's at $63, and I was really hoping to see that. And we did see the price break out to the upside and increase, but something happened. All right, and the price moved down, and suddenly the price was thrown into this consolidation pattern, the symmetrical triangle, which is shown in yellow. This symmetrical triangle is expressing momentum and strength of the bulls to push up to this price target, and the ability of the shorts to push the price down. And as you can see, the bulls did not win this fight. The shorts started to take advantage here, and through this bottom, this was pretty harrowing, but through this bottom outside that pattern, I maintained a bullish stance. I said, this just doesn't look like a breakdown, and that was correct. The price pulled back, and Bulkowski covers pullbacks. Pullback is a technical term, Bulkowski, and even moved up and out. But this candle is so wishy-washy. When you see a candle with this kind of height in its wick and its bottom and its tail, you just can't trust this candle. You can't trust this candle. Just don't. and this one, don't trust this one either. It's not a doji. It has a body, so it's not a doji. It's not a reversal candle, but the price appeared to reverse anyway. But again, false breakout. Incredible stuff. I got YOLO played and I got destroyed, and I started playing puts, I think, back here. I want to say, yeah, I started playing puts back here, and I took a lot of heat for being a bear when the price was bouncing back 1, 2, and 3, and I said, no, this is a big measured move down. And what that essentially means is that the first leg down, which is right here in red, that starts at around $45, should equal the second leg, the second move. And if I just duplicate that and bring it down, you're not gonna like this. You're not gonna like this. And I'm sorry, but this is just what the analysis says, and that's all I'm doing, is just making the analysis. That price target's way down here at $15.80. Holy cow. Yeah. That's only a few dollars above our new triangle target. So, or that pennant target, that bear flag. It's not a flag, but it has a flagpole. This leads me to believe that the price will move lower to achieve those price targets. And geez, let's just talk about these candles. These 4 candles, 1, 2, 3, 4. Each candle has a lower high, dum, 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 and a lower low, ka-bung, 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 ka-bung. And this candle's green. The other 3 are red. This got a lot of people really happy, but if you're looking, if you're thinking technically, the color of a candle can be important, but it's not a law. All right, this is still in a downtrend. This does show us that there was a bounce, and then what does this candle tell us? This candle looks like, let's see, the price opened, and then there was a drop. There was a bounce higher than yesterday's high, but ultimately the price came back down and closed below. So we do have a marginally higher high. Effectively, it's the same high almost. But that was too high. The price closed below that. So moving forward, to see something going down from here is very possible. It would look bad on the charts though. That's the only thing, is my gut's like, really? Really? Is that what that would look like? Ideally, what we want to see, at least what the bulls want to see, is a gap up. And really that gap up needs to be above the trading range. They want to see a gap up, probably up to $26, a test of 29. There will ultimately be a retrace, and that could be a really volatile rejection off of 29. And that's probably just going to have to be, this is going to happen if the price reaches 29 again. It's going to have to bounce down probably back to these tops before busting out and up. I don't think that's what's going to happen though. It's just less likely. Had that double bottom confirmed today, yeah, absolutely. And and just think about how the candle would look different if the price did close near its high, its intraday high. Then the body of this candle would have been much more full. We would have had a solid hammer, and that would actually be green. That's what the candle would have looked like if the price had closed higher, and that would be a great bottom candle. Having it occur kind of like above a big fat tall green candle is a little weird, but it still would have been essentially the same, saying, hey, we found a bottom and we didn't like it, so we jumped up. But that's not what we saw. We saw, hey, we found a bottom, we jumped up, didn't like it up there either, so what? The price is just floating out in the middle of nowhere, and volume was low. I mean, lower than the last 3 days, at least. Coming in at 52 million shares, it's not too far above the 30-period average at 43 million. I mean, I guess it is, but to be honest, it's just a really wishy-washy thing. If you're looking for a strong bounce and reversal, this is not it. I do want to say that there is an opportunity here for a reversal, obviously, because we have a higher low. And technically a higher high, but it's very, very weak. So that's what I have. I have big measured move down, and this measured move down is actually composed of a bunch of bear flags. Not a bunch. There is a flag here. I think I chose to read this as a flag officially. Can I draw this line? Say hey. Let's see, there was a flag in here. This is kind of messy, I apologize for that. Right there, this was a flag, and then it broke down, and that it played out in this way is really incredible to watch, because it's the same setup that we have down here, right? Rejection off of a minor high, rejection off of a minor high, a leg down, a high volume bottom, and it's a spike, and then a bounce up, and a bounce up. And in both cases, I believe the level of retracement's the same. I know that this one's 70%. Or it's close. Let me just adjust this really quickly, and I'm sorry, I just have so many things I'm thinking about. I'm just gonna ramble a little bit. Okay, oh, it's upside down. Okay, so I did this backwards, obviously. Let's see here. No, I won't use the inversion, I'll actually fix it. Okay, let's just fix it. I'm just gonna do this. flip it on its head, pull it up, and then I like to, let's see here, get this lined up. So you can see it actually passed 70% quite strongly. Quite strongly. Let's see here. I'll probably have to adjust the height of that measured move down to make sense. Oh, it's higher? Is it higher? At any rate, the measured move down looks for a minimum retracement of 70%. So to see the price bounce higher like this is actually a slingshot down. I know, people are looking for the slingshot up, but these consolidations are really healthy for the downside action. It's shorts taking profits, and that's their buy volume. Those are short sellers' buy volume you see pushing the price up. And that's why when they're pushing the price up, it's done in a way that is disadvantageous for the bulls. You might ask, wow, we saw volume increasing today. We saw the RSI go up. How come we didn't see a run? And that's because those that are in control of that volume are probably taking a lot of caution and not rising the price too greatly while they close their positions and take profits. And that is them getting ready for round 2. And in this case, it's going to be round 3, because here we have a similar situation where we have a retracement of at least 70%. And I'm going to start the bottom. Start the bottom and draw up. Oh, we didn't quite reach 70. Interesting. There might be more upside here. I shouldn't have done this so candidly. I should edit this, but I'm not going to. Oh, it is 70%. Okay. Yep, at least 70%. You're kidding, right? You're kidding. Beautiful. It's another beautiful measured move down setup. Another measured move down. And I can see that my camera is lagging a little bit at this point. I'm not sure why that happens. Right, so what does that mean? It means that we're probably going to see another move of equal height here. And I'm pretty sure this is what the fractal theory is that a big move on a chart is composed of smaller versions of itself or iterations of recurring chart patterns within a move. And that's what I see. I've seen at least one. And then this was a measured move down, 2, and I believe this is also a measured move down. This would be 3, and that there was another measured move down in here. I think that we're looking at 3 or 4 different measured move downs all playing out at once. Oh god, this price target's bad. $12? That's also really low. So when I'm looking at these charts, that's what I'm looking for. I'm looking for bearish or bullish patterns and then confirmations. And right now, what we did today by hitting that 70% retracement and moving down from it and seeing the bulls lose steam there is that'd be my confirmation that tomorrow is going down. And I'm holding on to puts. I'm ready for that. And if the price does skyrocket, I can lose all of this and just YOLO on calls, which I won't YOLO. But at this point, as the implied volatility continues to increase, I am making one-sided plays. And these one-sided plays are incredibly aggressive, and I acknowledge that. I don't recommend people trade like me. I don't. Like, seriously. I move with a lot more confidence than I probably should. I'm just very deliberate about what I do, and I'm ready for this thing to go down again. You know, and looking at this retracement level, how flat that is, let's just talk about how this could be a flag too, right? It's like you have your touch points. 1, 2, 3. And then the lower level of that flag. And in a flag, the lines have to be parallel, right? Parallel lines. Pennants, wedges, and flags are all different. That terminology is used synonymously across so many different channels. It drives me nuts. But they are different. But this looks like a flag too, which is nuts. Someone's calling me. I'm just gonna hang up over and over. Okay, so if that's a flag, I mean that's essentially the same as the pennant, right? It's gonna share the same flagpole. And the thing about the flag is this could very well just be a continuation pattern, and I've shown that too. Right here, that's what this flag was. Let me put a little gray box down. I mean, this is definitely not my most, I don't know, easily understood video. I have so many thoughts in my head, and I just want to get them out there, and I'm sorry if the camera's lagging. But this is, I mean, down here again, $12, like, okay. That's it, right? The analysis is like there's 3 or 4 different patterns all pointing down, and the one bearish pattern, the one bullish reversal pattern that we could have seen confirmed today was actually rejected and didn't happen. Doesn't mean it won't come, but it just means that I'm not trading on it because it didn't technically happen. And that's the beauty of technical analysis. When you have to ask, ooh, did it not? It's really tough to call. You can say, hey, did it reach a certain price level? And if it didn't meet that level, you just say no. And that's what I'm doing. Look at that 70% retracement level in after hours. Look at that. Confirming and rejecting here. Let me just delete that. This is a very real level. Very real level. Rejected. 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 This was too high. Incredible, right? Even in pre-market, we saw that a couple of times as well. Basically off the open, that's what that was. The open was a rejection of the 70% retracement. And let's just keep going back, right? How many times? Rejected here, rejected here, rejected here, rejected here. This was too high, too high. Rejected there, obviously. It's just like, I mean, this is crazy. To be able to draw a line like that. Maybe I should go over where I'm getting that 70% from too. And you can see this point of consolidation as the price entered that level. And there's even, and look, this is what I'm talking about. When people ask me about fractals, this is how I understand fractals, is that these patterns will compose and appear over and over within themselves. Like there's a little one, right? Here's a bigger one. Here's a bigger one. I don't know, maybe this one's actually a triangle. But you get the idea. So that's where I get my confidence in the price moving down, is that sort of price movement. Now let's just go to the measure move down really quick and let's talk about that. Chart patterns. Oh, I also have to explain how I got to the $4 or the $7 price target. Let me do that. Okay, so triangles. What I'm looking at is a descending triangle and its price target. So let's just go through the website really quickly. He says, Thomas Spolkowski says, at one time I didn't have a favorite chart pattern because I considered them just buy or sell signals. However, I was starting to show affection for descending triangles with upward breakouts. I've made a lot of money trading this pattern, certainly more than from trading their ascending triangle brothers. However, updated performance numbers say performance has dropped substantially over the decades. That's so cool. He's keeping track of this performance over time. So his analysis is even including the effects of high frequency trading. That's, I mean, Spolkowski's work, this is a legacy. Someone's got to carry this on. Let's have a look. Descending triangles. What's our percentage meaning price target for up and down breakouts? 64% to the upside, which is really generous, and 50% to the downside. And he says the above numbers are based on more than 1,300 perfect trades. Yikes, that's pretty good. That's a lot. Okay, so volume recedes 78% of the time in this pattern. Price must cross the pattern evenly. All right, price should touch one trend line 3 times and the other trend line at least twice. Distant peaks and valleys. It has a horizontal with a downward slope. Okay, the pattern confirms is valid when price closes outside one of the trend lines. And the measure rule is essentially to compute the height between the lowest and the highest price levels within the pattern, multiply it by the percentage meaning price target, which for the downside here is, what was it, 50%. You could take 50% of the height of the pattern, and then you're going to subtract it from the breakout price. And here we go. The median distance to the breakout is 61 to 65% of the way to the triangle apex. And Spolkowski says that a lot. And I'm starting to repeat that too because I'm seeing that. Volume trend. If volume slopes upward, the median performance improves dramatically. Okay, interesting. It says downward breakouts within a third of the yearly low do well. Upward breakouts, and we're so far away from any yearly high or low right now. And here's an example of a descending triangle, and this one was bullish. It broke out to the upside. You can see he has 1, 2, 3 touch points here, and they have distant peaks. The price moves between these levels pretty clearly up and down. That is to say, there isn't a drop, and then it the price flirts with this horizontal level for a long time before hitting 1, 2, and 3. This is a really well-formed example. I can understand why he chose this. The volume does not descend through this channel though. It actually peaks towards A, which is the bottom, and that makes sense. So I'm glad he did that. You will notice that should this triangle continue to extend out, that the apex where those two trends line meet is somewhere out here, and you will see that's where there was this big price reversal. And that's cool too, because Bukowski likes to talk about that, and I'm looking for that too. Where do I see this in AMC though? That's the question. And we're gonna go over some of that right now. Moving this back over, I'm gonna go ahead and zoom out into the weekly time frame. Okay, here we go. This is the triangle I see. This is our descending triangle. One touch point. I'll highlight these as well. Let me see what I can do here. I'm in log scale, so driving around the price is hard. Okay, so one touch point there. I have another touch point up here, and then I have like 3 there. And I have a touch point 1 or 2 there. I have a touch point at the close there, and then we fell through it. So the height of this pattern is considerable, with a high of $72 and the low being at about $29. Let's just say 72 minus, it's like 40 bucks, but yeah, let's say 72 minus, what was that, like 29-ish? 29. And this won't be a precise target, but it's such a big pattern, right? Like, it's $43. And when you divide that, or you multiply it by the percentage mean price target for downward breakouts, which is 0.5, you get $21.50. And so we're going to subtract $21.50 from the breakout price, which was, we'll call it $29. So $29 minus $21.50. Yeah, you can start to see already, huh? It's like, oh, those are both in the 20s. It's $7.50. And that's just eyeballing, rounding to the nearest dollar. So 706 was what it was precisely if you use all of the pennies, but otherwise it's about $7.50, and that's where that price target comes from. And if you look back historically, that's an important price level. And that's why I say you often discover these technical levels through the analysis. Wow, so that's the rundown. I think there's going to be a lot of bullish sentiment, a lot of we found the bottom, but I would just simply not agree with that. That on a technical level, that didn't happen. It could play out bullishly, it always can, but tomorrow is the first day that the market will consider what Powell said. We didn't see a big immediate knee-jerk reaction, which is good, but that doesn't mean that there ultimately won't be some reaction to that. He basically did say today that the markets respond to their announcements and news over what they actually do, which drove me nuts, but that's what I have for today's video. It's very long, very rambling, very sorry. I did a lot of thinking out loud. Double bottom by the bulls, probably broken. Descending triangle gonna break to the downside because it's a pennant. And yeah, stay safe and hedge your bets.